Hello, home buyers. My name is Chris Wan, Realtor with Berkshire Hathaway Texas Realty, and today I'm going to talk about interesting topic: non-QM loan, bank statement loan. Have you ever heard of it? Before? It's quite new to many home buyers, especially first home buyer. So normally, what we hear is a conventional loan, VA loan, and USDA loan, etc. Okay, let me go back. So typically we talk about conventional loan, FHA loan, and VA loan. This is a government loan, and USDA is a little bit suburb loan, okay, suburb area, and which is also very beneficial for the first home buyer and zero down payment option. And the conventional loan is standard loan and widely used and good for primary residence and then home investor as well. DPA, down payment assistance program, and widely accepted for the first home buyer and even none for non first home buyer, even some cases. And then QM and non-qualified mortgage and bank statement based cross collateral. You tend to not to hear this option often. The reason why is mortgage company cannot talk about a lot, cannot promote it actively, because what I heard from my partner and friend who are in the lending industry, they told me that they have to promote traditional mortgages like a conventional FHA, Freddie Mae, that kind of mortgage, right? And then QM is like outside of the box, and not all lenders do it. Okay, maybe half of them. Okay, and even the company allows non-QM, the loan officer, the person up front, okay, the front line, he or she does not want to deal with it because its criteria is quite different and have to go through the different route, and the paperwork is quite different, and it's not that easy loan. It's the different animal. So what's the key message here? Don't limit yourself. If you're disqualified from the bank, doesn't mean that you have zero chance for the loan, mortgage. You probably get approved, qualified for another loan, and through the non-QM loan in some cases, especially you're self-employed. All right, and so typical cases, you're not disqualified for a loan. You may qualify for a loan, but less amount, which is also the matter, because here in Austin, Texas, the most recent report says the city of Austin, the median price of city of Austin home is more than $400,000 worth. Okay, so if you're qualified for the loan, let's say $200,000, you can put down $100,000. So you only qualify for the $300,000 worth home, which is you may have a hard time to find a home within the city of Austin, but you may find a home outside, or you may qualify for the non-QM. Let's say the loan size, you can increase the loan size to 150 or 300 for your dream home, and sits in your targeted area and totally different neighborhood. Okay, so keep that in mind. So what is non-QM, by the way? What's the definition? Okay, good question. Alright, non-qualified QM is any home loan that doesn't comply with Consumer Financial Protection Bureau's existing rule on qualified mortgage. Okay, so typical the standard loan require a lot of paperwork, meaning a tax record, typically 2 years tax record, and typically proof of your income and proof of your employment, and lots of documents, right? And much more than what I'm talking about here. And let's say, what if you have some of documentation is not ready, and your for example, you have a little bit high debt ratio, you're a self-employed and the record is not enough, you're lacking in tax return documentation, does it mean that you have no chance for the loan? Answer is you may have an option, that is non-QM. Okay, a little bit detail. This is a good explanation. So normally non-QM based on your bank statement. So you have to provide fully of bank statement. So using that as an income. That's why that's why they don't rely on the tax record for the income, and they more rely on the income statement based on your bank statements. So personal bank statement or business bank statement. So they calculate the income like this. So I'm not the lender, but I know the lender who can deal with this the products for the borrower like you. Okay. So keep that in mind. So let me go back. Alright, so topic is, I'm talking about the actual client cases, a success story. Recently I did it, and it's a different animal. Okay, so you have to work with the lender who have some of experiences, and hopefully the realtor as well. Realtor has some experiences, because it have to be worked together as a team. It's not that easy loan, and then different. And there's so many things that you have to understand first up front. Okay, don'ts and do's and lessons learned, okay, etc. So through conventional, so as I said, the lender trying to qualify you with the conventional, other typical traditional loan first. But if does it not work, some lender has only that option. Some lender only has a conventional loan, FHA loan products. So then if you disqualify with a certain lender, doesn't mean that you have no way, because of you haven't find a lender who can check box with the out of box the loan approaches, such as a non-QM, what I'm talking about here. So if you're self-employed, don't disqualify you. Don't limit yourself. So talk to me. Talk to the lender who has product for you. Alright? But what I'm talking about, brand new home builder buyer. Because resale home buyers, resale home owners, they want to sell the home as quickly as possible. So conventional, typically the contract, the close, the lead time, they think about like 30 days range, plus minus a little bit. For the bank statement loan, the typical contract to close, I would say 45 days. But 2 months is not unusual. So sellers probably won't accept 2 months lead time. And there's many, the MLS shows the loan option acceptable loan is like conventional, FHA, USDA, VA. Some cases seller financing. So that's why if you fall into this non-QM borrower, it's much easier for you to go find a house, brand new home, combined with the bank statement loan. All right. So normally the brand new home builder, they have a preferred lender, right? But keep that in mind. As I said, lenders, the mortgage lenders, every lender has a different products. Some lender has experiences in non-QM. Some lender, the loan officer have never deal with the non-QM loan, never done it a bank statement loan. Then can you succeed with that? It depends, but could be not likely to in succeeding the loan because of service boundary limit. All right. So in that case, I met one the builders, so sales representative, sales manager told me that when I discussed about non-QM client cases, he said, "Wow, in that case, he even himself thinking that his preferred lender may not do this non-QM loan." See, so even sales manager think that way. So what is the best approach in that case? Like me, I normally talk to the borrower first. Hey, client, let's get pre-approved. Let's pre-qual with the lender, outside lender. Outside lender meaning here is non-preferred lender, so not associated to the builder. So totally the third-party lender, right? So normally I suggest my client to get pre-approved, pre-qualified first, get the letter, and the reason why mostly the client wants to consider the preferred lender of the builder because of their closing cost support, the credits. Sometimes you can save up like $5,000, $6,000, $7,000, depends on the situation. And also, yeah, I understand that totally. But most important part two highlights. Number one, loan. Get the loan, succeeded or not. That's the most critical part. We agree? Even if you save a lot of money on the closing cost, if you cannot get the loan for you down the road, what is the benefit for you, right? Number two, lead time. Even if they keep saying yes, we can conclude it, but it delay, and because you will ruin your schedule and postponing, and then you have to extend your lease and rent, and you have to move twice because of your current landlord does not allow month-to-month extension, then totally chaos and under big stress. What's the benefit for you too? So two big issues. That's why you have to think about outside lender concept in terms of the lead time and loanability. Okay. As I said, don't disqualify yourself. Talk to your lender or talk to me so I can bring several lenders for you who can fulfill your loan issue, so that make you buy a house for you. Okay. And as I said, bank statement loan is not easier than conventional and longer lead time. As I said, 45 days, but easily up to 2 months. Still does not guarantee the loan, even if you have a pre-approval letter. Okay, and higher failure rate during underwriting, because typical the loan underwriter is who gives you approval or disapprove on your loan at the and in the last stage. Is a very critical the decision maker for the loan. For the typical bank statement loan, there's 2 times of underwriting is required. That's why much longer process and the longer lead time. And they may bring up additional paperwork. Something is not demanded at the beginning by the other processors or loan officers, the front end person, and unpredictable. Okay. Don'ts and don'ts. Because of bank statement loan and income based on the bank statement, so don't transfer funds between your account once you start your loan application. Okay, so talk to your loan officer whatever you want to do with your transfer between your business account and personal account, whatever the account, and be careful about that. And if your account number, bank statement account number has been changed within the time of period 12 months or 24 months, and please notify loan officer as soon as possible, because it may be a red flag from the underwriter. And most importantly, because of longer lead time, check your current landlord if you're on lease or rent, and whether that month-to-month extension is possible, feasible or not. Okay, if your loan process with the lender is being delayed, do you have any alternative or not? That's also crucial. And prepare all the documents in advance, meaning is prepare all your bank statement, personal business account, and if you're self-employed, most likely profit loss statement, and the CPA letter and business ownership, the certificate letter from the CPA whatsoever, and many that kind of additional paperwork may be required. So if you can prepare it, then you can save some time. Keep that in mind. Most of cases, loan disapproval because of the borrower cannot submit the required paperwork. That's the most serious issue, the biggest reason why. Let's say, oh, I cannot bring any CPA associate documents. That could be a big challenge. But I'm not saying that that is a limit, but that is a potential issue. So talk to me and talk to the right lender who understands your limits and boundaries, and answering all your questions before starting your loan application. This is a market update, but I already spent a long time. But I have another YouTube video about the most recent market updates. Please refer to that. And this is a mortgage rate, and historically we are really on the lowest time. Okay, and the most recent quarter, being lower than the previous quarter. So this is almost the best time to buy a house. Okay, do not wait. So I already mentioned it. So as I said, normally you'll qualify for the lower amount, and that typical case. But you want to consider non-QM because your target home is require more the loan value, the loan amount. In that case, you have to consider this alternative. Okay. Why you want to be a homeowner? So many benefits. I'm going to talk about one by one, but just cut down the chase. The biggest benefit is tax benefits. So this is allowed within the law, and then if you're a homeowner, you can save some profit tax when you sell your property. Okay. That was the 121. But this is a homestead exemption that's annually report your property tax. You can save some money, and typically range of 400 and 1,000, depends on the amount of property tax amount and your qualification, like senior or disabled, or but most common thing is if you are a primary resident owner, then you are qualified. Okay. Yeah, feel free to put down your jot it down your questions under the YouTube video, and I will try to answer all the questions. And like I said, I'm not the lender, but I do know the many lenders who can do best for these loan products, non-QM, and so work with the realtor who understand non-QM loan. Believe it or not many realtors do not know the non-QM loan and other difficult loans like this, other than the typical standard loans. Okay, and this is my contact information. I'm gonna put down here, and then feel free to reach out to me. Any questions, feel free to use me and so let's start from there. Thank you for watching.